Welcome to Inside India. I'm Amit Singh, and let's get straight into the headlines. The Indian market's extending gains for another session as foreign investors start wading back. After months of selling, the Nifty will be trying to break past that 26,000 level. Also, gold prices holding steady around the 5,000 level as Treasury yields eased following soft U.S. retail sales data. But gold's steep run in the last quarter lifting earnings at Indian jeweler Titan. Its Q3 profit jumping over 60%. There's a lot that's been happening in the Asian markets, and for that we have JP Yong. He's going to be looking at the Asian markets. You've been traveling and you're back now, so you have the on-ground understanding of what's going on. Huh?
Well, from one market, particularly Thailand specifically, and so far the Saturday saying Sawadee Cup on a Wednesday, they are setting some of those gains after the election saw the Boom Chai Thai party come to a commanding lead to actually form a government out in Thailand, and they are one of many markets that are actually trending higher in today's session. Keep in mind, Japanese stocks are offline today because of a national holiday in Tokyo. But again, you're seeing also strong gains from greater Chinese markets. Now, mind you, the Hang Seng did open today in the red, but they've bounced back quite significantly from that early morning blip, actually, and they're up by about 0.5%. Ditto for the Shanghai Composite, trading up by 0.2%, despite the fact that we did see a consumer price in China once again coming in on the soft side and looking deflationary. Producer prices, though, while in deflationary territory, are showing signs of recovering just a little bit, and perhaps just giving a little of a boost actually for market sentiment in either Hong Kong or in Shanghai. The Taiwanese TAIEX also up by about 1.7% today. There is a press now, a press of urgency that is from Taiwanese leaders to pass a special defense budget there, but no real evidence that this is also contributing some of the optimism out in Taipei. But definitely the TAIEX one to watch today, as is the South Korean Kospi. Now, if you look deeper into the Kospi, one of the best performers once again year to date in Asia, there is a lot of optimism with regards to chip makers. And news today that Samsung and SK hynix will be teaming up with OpenAI to open up yet another data center. However, you're seeing mixed fortunes for the two memory chip giants today. Samsung shares up by about 0.5%. SK hynix, the kings of DRAM, trading about 0.8% in the red. But again, it's not a huge sell-off hitting SK hynix so far in today's session, while the Korean won looking just a bit firmer. And staying in currencies, we have to take a look at the Japanese yen, because while the Nikkei 225 and the topics are offline today, the Japanese yen continues to trade and it continues to trend stronger in today's session. Partly all due to the fact that the dollar index has softened and weakened so far today, lending some oomph to the yen, but also that resounding victory by Sendai Takeshi and the LDP in Monday and on Sunday's elections, thus also perhaps cementing their policy clarity for them, and markets now pricing in the fact that perhaps some of that fiscal exuberance or expansionary policies that they're proposing will not hit their fiscal discipline that much. They will be more disciplined. At least that's the bet the markets are pricing into this session, and we're seeing so far the yen looking strong and looking quite confident days after that historic election actually out in Tokyo and across Japan as well. Amitosh.
All right, JP Yong, with all that perspective. Thanks so much for that, JP. We're also awaiting the delayed non-farm payrolls report later tonight. Ahead of that, we got some soft retail sales data from the U.S. from December, flat in the busy holiday spending month, which leaves some doubt over the strength of the final GDP print of 2025. Remember, the Dow closed at a record, and the U.S., the broader indexes, the S&P 500 lost 0.33%, and the NASDAQ composite slipped 0.59%, declining on, of course, AI concerns, as is usual nowadays. The Indian markets come online in about 45 minutes. GIFT Nifty futures, what are they indicating? Well, they're indicating that we will go above 26,000. Nifty was up about 0.26% or 67 basis points on Tuesday to finish at 25,935. And this was all fueled by broad-based buying, auto and metal stocks, leading the index to a third straight winning run. We talked about Titan, Apollo Hospitals powering the market with strong earnings, along with foreign fund buying looking sunnier. The rupee strengthened to about 90.12 on Tuesday for a bit before weakening towards the current number, which is at 90.54. And what we understand is that the Indian rupee is expected to find support because this is at the open, of course, because of that fall in U.S. yields. That's what we're waiting to see, whether that will happen. 45 minutes will give you more on that. Inflows into Indian equity mutual funds, surprisingly, they slipped for a second straight month in January as market jitters over geopolitical and trade risks weighed on sentiment. Industry data shows investments fell more than 14% from December to about 240 billion rupees. At the same time, foreign investors pulled nearly 4 billion out of Indian equities. The sell-off was reflected on the markets. The Nifty 50 did fall about 3%, with mid and small cap stocks also ending the month in the red. But since India and the US announced a trade agreement, reports say foreign investors are coming back to the Indian markets. And Reuters saying provisional data shows foreign investors bought around 1.7 billion US dollars in Indian stocks in the first 9 days of February. And last month, investors, they ditched equities for gold. Industry data showing Indian investors piled into gold ETFs, or exchange-traded funds, in January, driven by a surge in the precious metal, while domestic markets remained weaker. For the first time, gold ETF inflows at around 240 billion rupees matched or slightly surpassed net investments into equity mutual funds during the month. Gold ETF inflows more than doubled, while equity mutual fund inflows fell 14%. The shift also highlights a growing appetite for safe haven assets among domestic investors. At this point in time, gold prices, well, remaining positively stable at 5,050. Feroze Azeez is the joint CEO of Anand Rathi Wealth and is back with us. And it's great to have you back, Feroze. I remember talking to you about gold the last time we spoke and asking you this particular question, that is it simply that you'll see retail investors, take money out of the equity market and put it in gold, and that's perhaps what's happened. But I want to start with US-India, that particular tariff overhang. Has it gone completely in your mind, or is the market pricing it in only partially? You're not too excited about this, as I understand from your notes, because I want to check with you. Is it a win-win for both, or is it more of a win for the US, according to you? From your note, what we see is that you're pointing to how the US has achieved a little bit more than India, and you seem to feel that this is a win for the US. Is that correct?
No, that's not the summary. But yeah, of course, US has got its share, pound of flesh, I guess. Once the modalities are there is when you exactly know what it is in ink. Point one. Point two, I think it's a win for both the countries. But from a GDP standpoint, you would have a 0.3, 0.4% impact. From a trade deficit standpoint, it is not so large in terms of India's trade deficit won't change dramatically. But I think it's very important strategically. From a capital market standpoint, of course, the macros will take time to show up. But from a capital market standpoint, any news which creates an overhang on the market for 6 months, like 1st of August, if you look at August, somewhere thereabouts is when the first 25% tariff and then subsequent 25 also happened in August. In September, we had some talks. In this Delhi, we had some talks in October. The only positive sign finally came on 21st of January when Trump spoke positively about a prime minister in Davos. And then finally, you have this in February. So the larger the overhang, larger the impact of a certain deal. So that's point two I'm making as a hypothesis. Point three, I would say that the low after budget and pre this announcement is one of the turning points in the Indian capital markets from a bearish sentiment which was languishing. Markets were languishing from 2024 for about a year and a half. I think that will be a turning point. Can the markets test a further low? Of course they can. Can they sustain there? I guess it's going to be very difficult to, because FIIs have sold a lot. And I think the shares have changed hands into DIIs over the last 1 year. And that's a very good sign. When shares find or ownership finds a permanent place, when the temporary person comes back, he has a per unit of money. He moves the market far more than what you would envisage.
Yeah, we're looking at your, very fascinating graphic on India's core demand status and US core demand status. And the status of India's core demands has fewer achieved statuses, while the US core demand status has many more achieved statuses. In some of India's core demand, you've written likely, partial, unclear, likely, ongoing. But with the US, you've written achieved, achieved, ongoing, achieved, unclear, achieved, partial. Just want to make that point. That's why I was extrapolating that you believe this is more of a win for the US.
Can I clarify? What happens is sometimes when you're negotiating, you have more points. You actually want to win the war, not those battles. But you need to fight a lot more battles than you. So it's not just about the number of counts. When you negotiate, you're asking for 10 things. You really want the 1 or 2 things. And it helps you negotiate. So I'm completely with you. I've personally in my note mentioned that numerically there are more wins for the US.
All right, okay. Let's ask you this, because this is not something that's been addressed a lot. Does the market care about the fact that India hasn't confirmed Trump's claim that India has committed to stop buying Russian oil? And how much of a risk do you see the possibility of Trump reneging on this and reimposing the 25% tariff penalty?
See, I personally think I think that's time will tell. But whatever has come after this deal, you would see that if you look at the trades done from the 1st of or the 2nd of February, you'll be surprised that FIIs probably have bought about $1.5 billion. And mutual funds have sold marginally. Insurance companies have bought. If you look at the total trade done in the last 4, 5, 7 days, of course, the volumes in cash market, almost about 1 trillion rupees of shares change hands. Not that the whole rally of the last 7, 8, 10 days of 1,000 points and Nifty has happened on a back of a lot of volume. The average volume has been 1.25 trillion, and that's what the average volume is. So what am I trying to get to? If the trade deal is a little different, would it create a large impact? The answer is no. Of course, the Russian oil debate is going on in India a lot more, and only time will tell what would transpire. So I would refrain from commenting on that projection, which is anyone's guess.
All right. I want to point out that in the last couple of months, you've spoken to us twice before. And the first of those times, you said FIIs will come back to India when they were not. The second time we spoke, you said they have not come yet, but I continue to think they will come back. But since India and US announced their truce, FIIs have come back, have turned net buyers. You must feel vindicated. But I want to ask you, how sustainable do you think that is? And are there any risks to this?
Amitoj, I think, I don't consider this like a serious buying. Thank you. But I personally think that this kind of adjustments, almost on a 900 billion total ownership of FII, I would say that these are minute adjustments. Decisively, they should come back by April if this deal went through in the shape and form it currently is envisaged to be. What gives me a positive sign is not just the net flow, because if you break FIIs into a two-dimensional matrix, FIIs, which kind of FII and what are they buying? If you made this as a box and you would get about 9 different cells in that box, what gives me positivity is that passive guys buying small cap is very, very large. If you see the ownership change of FIIs in different segments over decisive periods of, let's assume, pre-COVID to now, they have reduced their ownership in large cap from 42.66 on a free float basis to 38%. Large cap has come down in terms of ownership, unlike the perceived FIIs run for large caps. In the small caps, they've increased their ownership by 2%, at the same time where they've reduced the ownership by 5.6% in the large cap space. When a FII buys small cap, that means they are doing some degree of long-term buying. If they were completely disappointed with my market, they would reduce small cap more than the large cap. So this tells me that sentiment needs to go positive for large monies to come. Large monies get absorbed only by large cap. But their positivity towards India growth story is depicted in their action in the small cap, which is 22% of the 22.7 has gone to 23.61, and 11.4 has gone to 12% on a total float and a free float basis.
Amazing. This is exactly what I was going to ask you next. And I'm so glad you mentioned this, because we've talked about this in the past, and you've said that your first sentimental barometer is to understand the state of flows in the Indian market in the context of small cap funds. And that's what you've indicated right now, because there does appear to be a significant shift in FII investment strategy, moving away from these traditional blue chip large caps towards the growth oriented smaller companies. So thanks for that color. And in that context, I want to ask you is, India is, well, I think most would agree that one of the few growth markets left, and therefore one can assume that it will always be at a premium, and earnings growth will never catch up to valuations and will really remain liquidity driven. So in that context, how much of this happens, this catching up of this, the earnings and the premium, but never completely, perhaps.
Yes, I think valuation of India is going to be elevated for some time. Why does it deserve to be elevated for some time? One, like you rightly said, Amitosh, that growth is going to be larger and capital chases growth. The second hypothesis is India has not finished its financialization journey of the lower strata of one of the largest population in the world. Would you give in that period an extra premium or not? If a cryptocurrency which can't be valued can be pumped up so much by having levered ETFs, companies only owning as vehicles to own crypto, and they come into index, they take the equity capital to pump up crypto. If that is how an asset which can't be valued can get demand, then an asset which has growth, has close to more than a billion people, of course, there are fewer who own, but if they are going to financialize their savings, and India is a savings country, right? You see almost 1,143 trillion rupees of savings in India, household savings. That needs to shift. That's got 6.7% in equity. Deposits are 52% of the financial assets of a certain country. So during that period of 8, 10, 15 years, every country has got a bubble. And that's bubble. Here we are just speaking about 2 sigma more valuation than the historical.
Okay, let's talk about gold, even though there are many who will believe that crypto can be valued. Because SIPs versus mutual funds versus gold, that's an interesting narrative right now, because in a first, gold ETFs drew more investments last month than equity mutual funds. And I know you think that silver is just too volatile, and yet this is happening. What's your perspective between SIPs, mutual funds, gold, and silver?
Yes, Amitosh, I want to take you back to the crypto discussion. Of course, for the lack of time, they can be valued. Similarly, was Terra Luna and Terra USD valued as a stable coin, but that became zero in 2 nights, right? So anything which is on the theory that another person will buy it off me, and you can't own it and monetize it completely in whatever number of years. So Terra Luna and Terra USD became zero, and they were called stable coins, ironically, and they were valued at 1. Right. So coming back, that's a longer debate. But yeah, it's not just a off-the-cuff comment. I've done a reasonable amount of study to come to that conclusion that if you value it, then you need to be able to monetize it without a buyer. Coming back to the gold and silver, your judgment was absolutely right when the last time we spoke. You said that the retail will move to gold and silver. That happened in India, more from the HNI segment than the retail segment. I'm just giving you the little fine print. What has happened is the FOMO caught up so much in January. Unfortunately, in the last leg of a certain super speculative rally driven by a gamma squeeze, that's what is happening in CME. In my opinion, every day you're missing 2% on silver rally. The kind of money which moved is unprecedented in gold ETFs and silver ETFs. And the average purchase of the individual is, if you have to say it in dollar terms for your channel, if viewers to be understood, is $100 for silver and almost about $5,400 for gold has been the average purchase. And now you see about 30% lower on silver, 20% lower on silver, and about 10-15% lower on gold, 10% lower on gold. So yeah, that's sad that people definitely fall for the FOMO trap. But one silver lining in the dark cloud from the equity standpoint, Amitosh, which you highlighted, that has dipped second straight month, is the 31,000 crore systematic investment plan number. So what is the hypothesis I've been testing in India is the retail is behaving far more rationally than an HNI in India because the emotions are not driving decisions because of the smaller quantum, which an HNI finds it difficult to weather the volatility on larger values.
So much to talk about, so little time. Feroze Azeez from Anand Rathi Wealth. The next time we speak, I'm going to ask you about the fact that you've said defense is overbought, but now India has gone ahead and increased its defense budget by 15%. But we don't have time for it right now. Next time. Thanks so much for that. Okay, coming up, India ramps up its critical minerals push. Reports suggesting New Delhi is in talks with multiple nations to reduce its dependence on China. We'll be back with the full story after a quick break. Welcome back. India is in talks with Brazil, Canada, France and the Netherlands on joint deals to explore, extract and process critical minerals, especially lithium and rare earths, as New Delhi looks to reduce dependence on China. Reuters sources say the Ministry of Mines is leading these negotiations, with Canada's Prime Minister expected to visit India next month to finalize cooperation on uranium, energy and minerals, and AI. India has already signed similar pacts with Germany, Argentina, Australia and Japan, and is pursuing agreements with Peru and Chile, part of a broader push to secure supplies vital for its energy transition and industrial growth. India began working on a rare earth and critical mineral deal with Brazil in July, and last month at Energy Week, Canada initiated discussions with India on rare earths. And India's Oil India chair said they've started such discussions with Canada too. Speaking of those discussions, CNBC's Ritika Gupta caught up with the Canadian Trade Minister, Maninder Sidhu. They talked about Ottawa positioning itself as a source of critical minerals for countries in Asia, and of course also about the Prime Minister's expected visit to India next month. Here's a slice of that conversation.
Canadians have strong connections here in Asia, especially in the region. You're seeing what we're doing through the CPTPP trading bloc. We have many other active negotiations that are going to be happening this year with India, with Philippines, with Thailand, with ASEAN, of course in the Gulf countries as well. And so there's a lot of opportunities here. Look, the region is growing fast. You're seeing a lot of need for energy. You're seeing a lot of need for agriculture. You're seeing a lot of need for critical minerals. Canada has all of that. We have 5 LNG projects in various phases of development. We're very proud. In June, our first shipment from Kitimat, BC, reached Asian markets. First time a large LNG shipment going outside of one particular market into Asian markets. And so that presents a lot of opportunity, as you heard Prime Minister Carney say over and over again, that Canada is an energy superpower and we have a lot to offer. And so here in Asia, as you know, there's a lot of need for agriculture, energy and mining, and we have all of that.
And when it comes to India, you mentioned they're doing deals with them as well. Is Prime Minister Mark Carney, is he confirmed to visit India officially to restart trade deal negotiations? And what can we be expecting from that visit if it goes ahead?
Yeah, in India, I was there just a few months ago in November to explore areas of collaboration. I sat down with the Energy Minister, Minister Hardeep Singh Puri. India is requiring about 70% more energy by 2040. And again, coming back to our original discussion on energy, we have what the world needs. We have what India needs in terms of LNG, but also if you look at nuclear, we're a world leader in nuclear in terms of CANDU, in terms of SMR, small modular reactors. And we have the first commercialized unit in the G7 of an SMR with a partnership between GE and Hitachi in Ontario, Canada, where we've invested $2 billion. And so there's a lot of conversations around energy with India, around mining, around AI, technology. And so this visit in the coming weeks comes at an opportune time to explore those opportunities, but also I'm proud to say that we'll be launching negotiations in the coming weeks with India on a free trade agreement. India is destined to be the 3rd largest economy in the world, and so we need to continue to engage. We've got a long-standing economic relationship with India, and we'll continue to grow on that.
Security advisor Ajit Doval was in Ottawa on February the 7th, I believe, and meeting his Canadian counterpart Nathalie Drouin. So since trade and energy is now becoming a matter of national security in what is a new global order, what are you expecting to come from those talks?
Yeah, look, first and foremost, I think it's important to mention that the public safety and security of our citizens is our first and foremost priority in Canada by our government. Of course, there's law enforcement dialogue happening. This expands from the Prime Minister's conversations at the G7 between Prime Minister Modi and Prime Minister Carney on keeping communities safe, transnational oppression, fighting organized crime, doing it together. And so the law enforcement dialogue will continue. But we can also continue to have engagement and dialogue on economic cooperation, and that's exactly what my job is as an economic minister, is to continue opening those doors for Canadian workers and Canadian businesses.
Huge expectations from what will happen when Canada's Prime Minister comes to India. There's a uranium deal worth potentially $3 billion. India's Foreign Secretary Vikram Misri also held strategic dialogue with China's Vice Foreign Minister Ma Zhaoxi, who is visiting India for the BRICS Sherpa meeting. Both sides reviewed what they've described as positive momentum in bilateral relations and discussed ways to further advance cooperation. China's foreign ministry said the two countries should see each other as partners rather than competitors and emphasized the importance of managing differences. Ma's visit follows a series of high-level exchanges between the two countries aimed at improving relations after ties were strained by a deadly border clash in 2020. Coming up, oil markets holding steady as US and Iran mull further talks and the scope of those negotiations. We'll be back with all the details after this very short break. Welcome back. You're watching Inside India. These are some of the stories that we're keeping tabs on. India is tightening its social media compliance rules. Online posts flagged as AI-generated content are required to be taken down. Guess what? Within 3 hours of the initial notification, a much tighter deadline than the original 36-hour timeline. The new regulations take effect on February 20th as India positions itself to aggressively regulate online information in a country of over 1 billion internet users. Also, Commerce Secretary Howard Lutnick admits to visiting Epstein's private island at a congressional hearing on Tuesday. This comes after newly released files included emails showing Lutnick apparently visited the island years after he claimed to have cut ties with the sex offender. In his testimony, he admitted that he did visit the island with his family to have lunch for an hour, but still insists he did not have any relationship with Epstein. The secretary continues to face bipartisan calls to resign, though President Trump continues to support him. Also, UK Prime Minister Keir Starmer pledging to never walk away from the job despite mounting pressure on him to quit after the appointment of Epstein-linked Mandelson as ambassador to the US. Brushing aside calls to resign from within his own party, Starmer instead urged fellow Labour lawmakers to rally and fight against the far-right populist Reform UK party, rather than amongst themselves. Take a listen.
I had a 5-year mandate to deliver the change. I intend to get on with what I was elected to do, which is deliver that change. I'm really pleased that we've got a united cabinet behind me in that fight. We need to concentrate on bringing about that change, because for millions of people who are being held back by this system that we're in, they need us to be fighting for them, and that is what we're doing.
All right, let's also take a look at oil in Asia trade right now. Well, light crude at 64.49, up about 0.83%, and Brent crude up about 0.75%. U.S.-Iran tensions still in focus, and that's what's perhaps influencing the market in the oil world. U.S. officials are reportedly mulling the seizure of tankers carrying Iranian oil to put pressure on Tehran. A top advisor to Iran's supreme leaders met with officials in Oman. All this as both countries prepare to resume negotiations after meeting in Oman last week. A key dispute is whether talks expand beyond the nuclear file to include Iran's ballistic missiles. Tehran says its missile stockpile is not negotiable and wants sanctions lifted. The next round of talks has not yet been scheduled. Also, we're watching Adani Enterprises saying a U.S. agency is conducting a civil investigation into some of the company's past transactions that may have involved Iran or parties under U.S. sanctions. The group says it received a request for information from the U.S. Treasury's Sanctions Office earlier this month, following a Wall Street Journal report that alleged Adani-linked firms imported Iranian LPG using routes that may have evaded sanctions. Adani insists it has not violated any rules, saying it initiated talks with U.S. authorities voluntarily and that the agency has made no findings of wrongdoing. The company adds it stopped all LPG imports last June and does not expect any financial impact. The Adani Group has been under intense scrutiny since 2023 after allegations by U.S. short seller Hindenburg, which the company has repeatedly denied. Meantime, the Indian Coast Guard has seized 3 tankers off the coast of Mumbai. The first sign that New Delhi is now cracking down on the so-called dark fleet of ships suspected of carrying sanctioned oil. In a post on X, the Indian Coast Guard said it had busted an international oil smuggling racket, adding that the vessels had a history of frequently changing their identities. Reports say this is the first time India has taken such action as the US and Europe push countries to act against poorly regulated tankers moving sanctioned oil. All right. We're about 12 minutes away from the market open in India. This is how we're shaping up. It's looking like the market will go past that 26,000 mark, and that might provide some renewed momentum after the US-India trade deal was announced. The rupee is where it's getting interesting, 90.5760 after touching 90.12, so strengthening but then weakening again. And the India 10-year benchmark government bond yield is at about 6.7207 from its previous close of 7.246%. So we're watching that space very closely. Turning to the crypto space, zooming in, of course, on the biggest one, Bitcoin first. Staying volatile, has been for a while now. It's at 68 or so, 316. It's been hovering near that 70,000 mark. Some thought that it'll fall below 60,000, but it's down from its high of 126K in October. And Strategy's Michael Saylor overnight doubling down on his Bitcoin bet in an interview with our US colleagues overnight. Here's a snippet of that conversation.
We've got 50 years worth of dividends in Bitcoin. We've got 2.5 years worth of dividends just in cash on our balance sheet. So we're not going to be selling. We're going to be buying Bitcoin. I expect we'll be buying Bitcoin every quarter forever.
All right, and let's head over to Consensus Hong Kong, where our reporter Elaine is on the ground and leading coverage. Elaine, there's a lot happening. I want to know what's on top of your mind.
Hey, Amitoj, a lot happening indeed. Consensus is back to Hong Kong for a second year now, and the conference is in full swing now. Industry heavyweights have converged in the Asian Financial Center, and we've been speaking with industry leaders about everything from the volatility recently, trading, but also what's the next in blockchain technology, and also intersections with AI and AI agents and things like that, as well as a lot of people talking about President Trump's ties to crypto and any U.S. regulations, but also suggestions around conflict of interest. So there's a lot that's being discussed. And now joining me is Stephen McClurg, the CEO of Canary Capital. It's great to have you on with us.
Thanks so much for having me, Elaine.
So I want to start with, perhaps we can call this a crypto winter. Where are crypto markets headed this year?
Well, 2026, I expect to be a bear leg to the 4-year cycle. We've experienced several 4-year cycles since Bitcoin has launched, and this is no different than any other. The peak was in October when Bitcoin hit $126,000, and I expect Bitcoin to go all the way down to the $50,000 to $60,000 range this summer before things turn around in the fall.
And why do you expect a trough around mid-2026?
Well, first of all, the four-year cycle is really governed by the mining companies. And due to the last halving, mining companies had to start selling their Bitcoin in order to pay for new infrastructure, new software, and of course, energy prices. So one of the reasons why 2025 was a little bit lackluster is energy prices were very high due to AI data center build-outs. So Bitcoin mining companies had to sell early. And that selling pressure is going to continue all the way through the summer.
Yeah, and with AI infrastructure spend, it's something the U.S. is doubling down on. So we could expect to see that more this year as well. And so will how will electricity costs, energy costs this year continue to impact crypto then?
Well, already in 2025, energy costs have in some cases doubled and even tripled in megawatt per hour. And I do expect it to continue to creep up because where AI is today, it takes a lot more energy and a lot more infrastructure to get a nominal amount of increase in the actual data itself. So it's going to cost a lot more in energy. So I expect energy prices to maybe double again.
And I also want to ask about Bitcoin because Michael Saylor, we're just playing a snippet of what he was telling our colleagues in the U.S. He said he will buy Bitcoin every quarter forever. And of course, he's a known Bitcoin bull and strategy as a Bitcoin treasury company. But what do you make of those comments?
Well, look, I have no doubt that he's going to continue to keep buying Bitcoin. And if you buy Bitcoin at this level, it's actually a pretty good level, even though it might go down to the $50,000 to $60,000 range, but I do expect Bitcoin to recover in 2027. So if you're a long-term investor and you're buying at prices now, it's probably not a good idea to try to find the bottom because we're pretty close already. And I do expect Michael Saylor to continue to buy. I don't think he can buy forever because there's only so much cash that he has and he can raise, but I do expect him to continue to buy Bitcoin for a long time.
And what do you think, or how will rate cuts across the world impact crypto prices as well?
Well, I think when central banks globally begin to cut rates, we will see an increase of monetary supply and resumed buying in crypto and all risk assets. So I don't expect central banks to begin cutting, though, until the summer or the end of the summer, maybe even into the fall. Particularly in the U.S. The Fed still has Jerome Powell at the helm. Even though Trump has named his nominee, it still has to get past the Senate. And I expect the Senate to delay that for many months. And then even when he gets into place, he has to wait until the next Fed meeting to start cutting rates. So I do expect a delay in rate cuts.
And a lot of people, have been talking about institutional adoption of crypto, moving into the space. But now with all the volatility that the year has seen already so far, what do asset managers want from crypto in the coming year?
Well, what I'm seeing out of institutional investors is they're buying now. For instance, we launched several ETFs back in October. And even though that was the top of the market and the market has come down since then, we've had continued inflows coming in from institutional investors. And they're not so much concerned about finding a bottom or trading around positions. They're looking at building a long-term position, and that time that it takes to build that position could be very long. So I do expect them to continue to buy all the way through 2026, 2027, and then when the markets start coming around again, they'll have a good solid core position. So I don't expect buying to actually decrease during this period.
So they're actually approaching this crash as an opportunity to go in a bit more then. Are they cautious though with all the volatility? I mean, not just in crypto, of course. We've seen what's happened with metals, stocks as well in the tech space. But how would you measure their caution when it comes to this asset class?
Well, I do expect them to be very cautious, and it's going to come in the form of some institutions and some financial advisors have a target allocation, whether it's 1% to 3%, and they're going to spread that out over the year. They're not going to buy it all at once in January or in February. So they're going to continue to buy to hit their allocation targets. Other institutional investors and other financial advisors, they're going to be a little bit more cautious and wait until they see that there's a recovery in place before they make their allocations and begin buying, which could be in 2027.
And I want to ask about U.S. regulations as well. The industry welcomed the Genius Act, of course, and there was a lot of excitement around stable coins. And now the Clarity Act is facing delay. So how do you think that will impact how the industry develops in the U.S.?
Well, I think the Genius Act was a great first flag in the ground to say that, okay, we've got a lot of clarity here. Even though there's some delays on the Clarity Act, I do believe that it will get done. But more importantly is soft regulation, and that's Trump putting people in place that are pro-crypto. The Secretary of Treasury, the Secretary of Commerce, the head of the SEC, the head of CFTC, and of course his nomination for the head of the Fed. So regulation, comes in both laws and in soft regulation too. And the soft regulation has been fantastic. Chairman Atkins of the SEC has been one of the best leaders of the SEC that we've seen in a very long time. And he's been very pro-crypto, and really because of him, we've been able to do some of the things that we've done, which is launching the first XRP ETF, the first HBAR ETF, the first Litecoin ETF, and then several others that other issuers have been able to get behind. And that's really all due to Chairman Atkins and some of the other members of the staff.
And I want to turn the conversation to DATs, digital asset treasuries, because last year there was quite a bit of hype, I suppose, around those. People described the rise of DATs, but I think you're a critic of that. So can you share with our viewers, why do you think these structures aren't so great?
Well, there's a few DATs that will work and there's a few that won't. Most DATs are simply small operating companies that have failed in some ways. They're not profitable, and they're hoping for a bailout from the crypto community. So they've allowed their treasury to be taken over by a protocol. And what's really going to happen is they're going to act like closed-end funds, publicly traded closed-end funds, where there's going to always be a discount assigned to the value of that treasury. So in a bear market, that discount's going to be very, very deep. And I expect the discount to be, 50%, 50 cents on the dollar to the amount of assets they hold in treasury. In a bull market, it will likely change, but it'll still trade at a discount. The DATs that I think work, MicroStrategy is a good example of one that's working. Some of the bigger Bitcoin DATs will work. And then, of course, some of the DATs on protocols that utilize proof of stake, and they're running validators to actually make income, meaning that they're supporting the network with the coins they have on Treasury and earning a yield. And I think those are pretty valuable if that's their operating company.
And I want to ask about AI a bit more as well. You touched on the link between AI infrastructure, data centers, energy prices, miners, and crypto. But, AI is a big theme, of course, this year and in the last 2 years. How do you see AI and crypto or blockchain intersecting?
Well, there's a few different ways. Obviously, there's a lot of competition in the AI space right now. But one of the more interesting things that we're seeing in blockchain is the actual data storage and verification of data. And that's the hardest part of AI right now, is you can ask Grok, something, but where's that data coming from? Has it verified? And there's several blockchain solutions that are actually doing that and holding the data on the blockchain to be retrieved later. So one of the prime examples we're seeing is a protocol called Filecoin that was created about 7 years ago to hold and store data. And that is being utilized right now. One of the bigger ones that we're seeing is Hedera. Hedera uses its hashgraph technology to store data, to verify data, and then to send it out to when AI prompts come in, and then they can display that data.
Fascinating conversation about how AI is used, the challenges around verification, but also where crypto markets are headed, as well as institutional players coming into the space as well. And Amitosh, it's back to you for now.
Thanks so much for that, Elaine. At the same time, we're hearing from Anthropic's head of AI, AI safety, how he's quit, and he's basically warned of a world in peril in a cryptic letter. So there's a lot of stuff happening. Indian markets have joined the trading day. Right after this short break, we'll look at some of the movers in Mumbai as the earnings parade continues. right, welcome back. Indian markets are now online. It's been about 3 minutes. Nifty 50 at this stage, still flirting with 26,000, not giving in. That's what we're watching very closely. 25,996.54. It's jumping around 0.2% up from yesterday's close. The rupee and the dollar is where it's getting perhaps more interesting, where the rupee during the day yesterday strengthening all the way to 90.12 before falling back to this area, this region of 90.5 or so. Let's look at some of the big movers. Shares of jewelry maker Titan reacting to its earnings report card. The company reported a strong festive quarter, with profit jumping 61% to around 17 billion rupees. The surge was driven by higher gold prices and robust demand during the October-December festival season. Titan's jewelry business, which makes up over 90% of its revenue, grew 41% year-on-year, lifting total product sales to around 250 billion rupees. Gold prices climbing nearly 12% in the quarter, and consumers continuing to spend on premium items. Titan says the results highlight resilience across both luxury and mass segments. The shares up 1.5%. Meantime, Apollo Hospitals is forecasting mid to high teens revenue growth for the coming year after posting a stronger than expected jump in Q3 profits. The hospital chain said demand for complex care, including cardiology, oncology, and organ transplants, continued to surge. For the December quarter, profit rose to over 5 billion rupees, beating estimates, while revenue climbed 17% to nearly 65 billion rupees. Apollo plans to expand from nearly 10,000 beds to 13,000 by 2029-30, with most of the new capacity focused on specialty care as private hospitals accelerate expansion into smaller cities. The stock up 4%. State-owned Oil India reported a sharp drop in quarterly profit as falling crude prices hit realizations and squeezed margins. Standalone profit for the December quarter slid nearly 34% on year, even as fuel demand in India rebounded strongly towards the end of the year. Oil India's crude realization fell to 62.8 for a barrel from nearly 74 a year ago, tracking a more than 9% decline in global Brent prices. That, along with higher costs, pushed operating margins down to 13.6% from 30.7%. The shares down about 1%. Keeping it with earnings, Singapore's Capital Land Investments reporting a full-year revenue of over 2 billion Sing dollars. CNBC's Southeast Asia reporter JP Ong joins us now with a detailed breakdown of the numbers. JP, thanks so much for coming to the studio and having a chat with us after a very quick interview, I believe.
Yeah, this morning, of course, we spoke to Paul Tam, the CFO of Capital Land, actually. Again, the numbers did not look good on the surface, with you see net profits for the full year actually falling by about 70%, and also in the second half of the year actually reporting a net loss actually of about 142 million Singapore dollars. Now, one of the reasons also, Amateur, is because keep in mind that there is a move to become more asset light and to recycle that capital towards higher yielding projects for Capital Land. So that means divesting of certain holdings, certain assets, and also certain trusts, including the declassification of Capital Land Ascot. And when you declassify that, actually, you'll see a lower revenue and profit-making base, actually, which resulted in these particular numbers as they have for the most part of that year. What's important to note here is that operating profits after tax actually rose by about 6%. So if you strip out the declassifications, continuing operations are actually profitable, and they have expressed confidence that this is the year where things will actually start to turn around, given the impact of that declassification might not be recognized as much in 2026. Now, just take a look at some of their shares right now. In Capital Land India Trust also, which focus on data centers and also industrial parks in India, is down by about 1.5%, but they continue to push their foray into India and have actually said that revenues from India might actually become a more consistent growth driver for Capital Land. Here's what Paul Tam, their CFO, said actually, Amitosh, about what India will mean for Capital Land and what their outlook is for their investments there in 2026.
India's been very exciting for us. It's been a very robust market and actually one of our best performers over the last couple of years. Domestic demand and capital markets growth has been tremendous. We have marked up our valuations in India significantly the last 2 years for a lot of our investors. That's good returns, both on the listed side and on the private side. And it's nice to see, I think, some longer-term structural changes that we're seeing there. So, for instance, on the business park and data center side, in the business parks, which is one of our largest exposures, we've been seeing a lot of tenant demand globally as folks are moving into India and setting up global capability centers. And that's a nice uptick driving demand, and we see that continuing to the future. So when we look at that, we look at our data center fund, which we launched at the end of last year, so our India Data Center Fund. We see that trend continuing. And we are also seeing a lot of investors who historically may not have paid as much attention to India, really spending a lot more time in it. So we think it's good tailwinds. We think that growth trend will continue.
So So global, those GCCs and also data centers, two of the biggest thrusts, and also supporting this industrialization out in India that we're seeing, with more interest in relocating manufacturing out there. Data center operations take advantage of the booming AI craze that's also transforming how Indians also operate their business on a daily basis. And of course, the idea of these global competitive centers, or GCCs, are just also driving a lot of interest in some of these investments for CapitaLand. They are looking a lot more upbeat on India versus that of China at the moment. And again, for good reasons, because it seems that while China starts to slow down or go down at least a gear, you're seeing India finding ways to shift up a gear at least, especially in these two particular areas, Amitosh.
Yeah, the question is whether it's a shift from the third or fourth gear to the fifth gear, or the cruise mode, or is it from the first to the second in India? Yeah. I think it's more like the first to the second, given what's happened with talent, AI-related talent. We did speak to Shyam Arora, the Chief Technology Officer at Tech Mahindra, a couple of days ago, and he insisted that India remains the AI talent factory, while he also mentioned this positivity around GCCs. And we've had a number of conversations around how the affordability question for real estate developers is a problem, because that's not affordable when they're thinking about affordability. But when it comes to GCCs, they're like, yeah, let's go. This is where the money is. This is where we're getting good returns. This is where the investment is. And this is where the AI boom is. I guess I want to understand the competition, though, for that is tough. And it's all about whether it's going to be in two cities, Hyderabad, Bangalore, perhaps Mumbai, or is it going to be like in other cities, this kind of capital investment towards GCCs? What do you know?
Well, I mean, this is something that we'll leave some of the experts out in India to actually answer, because we'll need to talk to people on the ground there. But yes, you're right. You look at Hyderabad, you look at Bengaluru. These are the two cities that will probably lead the expansion. But it will be now down to the other regions. As we know, in India, a lot of these regions will compete for a lot of these investments. It just seems that Hyderabad and Bengaluru have done a really, really good job of creating the business case to invest there and to attract the talent there. But this also opens the door actually for a number of these others to actually make the case that, hey, it might be cheaper to set up here, and you know what, I'm starting to upskill my own workforce to make sure they can accommodate these GCCs, these new data centers as well. And that's going to be the question, because while India indeed has the potential to be the AI talent pipeline for the world, there are questions to whether there are gaps in their ability to do AI. Because if they are the AI talent pipeline of the world, then why is there an Indian DeepSeek? We've asked this question ad infinitum over the last couple of months also, and we're not saying that India is behind or is not competent. It's just that there might be skill gaps that will need to be addressed actually if they want to be a comprehensive talent pipeline for artificial intelligence of the world as well.
Yeah, we've asked this question to the government a couple of times.
Yes.
There's the Fractal IPO that's coming up very soon, a couple of days. There's also, LLM-related companies that are coming up. Yeah.
They're just skipping leg day, basically. And they need to stop skipping leg day, I think.
And India AI Summit is coming in a couple of days. French president also coming to India. There's a lot happening in India. Thanks so much for that, JP. That's all the time we have today on Inside India. Of course, keep watching CNBC. There's a lot happening in the Middle East too. Access Middle East is up next.